Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so I just wanted to go over why I feel like we might be getting to a time when it's good to short the market and basically just go over my strategy with that. And so to start, I'm just going to go over the SPX and then I'm going to go over a few ETFs that could be used to profit from the SPX turning to the downside. And so here we can see this chart goes back to 1970 on the left side here. So I'm just going to throw up some drawings that I did showing some trend lines and some key levels. And so this trend line here at the bottom goes back to 1982. You can see the two pivot points there, and we see right here where we did cross that line and then kind of took off from it and haven't been back to it. And that was in 2009 following the financial crisis. And if we zoom in, we can see where this line goes up. And I should note these candles are on the monthly time scale. And so from that bounce off of that level, off of that trend line, we can see these other two pivot points. And the last time that we pierced that level, I'm sure you can guess when it was. That was in March of 2020. Pierced that level, bounced, and we have not been back since. We've actually continued up on a different trend line. And yeah, let me just zoom in here. So we can see that from 2020, we have made new highs here at the end of January 2022, hitting a price of $4.8 thousand before turning down over the course of a couple years. And then we just recently pierced that level in January, and now we are trading above $5,000 per share of SPX. And with that, we have found this other trend line going from the low here at the end of March 2020 and here for the month of October 2022. And we recently almost got down to that level, but we have not hit it. And so, I'm just going to switch over to the daily time scale for the rest of this video. And I just want to look at where price is now, where I think it might be going, and how, we can benefit from that. And so I did another trend line here based on the lows on the daily time frame, based on the low of October 27th here, and then the low of January 17th. And we can see that no prices have been below that line until just yesterday. As I record this on February 14th, February 13th, we did pierce that level, but we did not close below it. And so I think that's pretty interesting that we are respecting this trend line. However, it's been tested. And so last week on February 9th, we closed the week at a price of $5,030.06. And so over the course of the weekend, news outlets were able to flaunt how strong the stock market is. And then the following day, on Monday, February 12th, we hit a new high of $5,048.39 before gapping down on Tuesday, testing that trend line. And then now on Wednesday, we've seen a little bit of a bounce going up almost 1% on the day. And so my thoughts with that are that we have maximum attention on the stock market right now, hitting all-time highs, getting that crossover, $5,000 before the weekend. Everybody is looking at it. And this right here, I view it as a lot of people viewing it as a buy the dip opportunity because the stock market's just going to keep going up. But it may not. And I think that this is an opportunity for those who feel they missed the opportunity to get in below 5,000. This was their opportunity to load the boat. And I think that we are going to see a pump perhaps over the next couple months, maybe later into the year. But I do think that the stock market will top at some point this year and we will be headed down. And I do have some gaps right here marked to the downside, with the lowest one being right around $4,200. And then one thing I do want to take a step back on, I forgot to mention this on the monthly time frame. You might notice that I do have this red line down here highlighting in the RSI that we formed lower highs, whereas in the price, we have formed higher highs. And so that is bearish divergence. And this is also on the monthly time frame. So it's quite possible that it may take months before this bearish signal to either be invalidated or be validated with a break of this uptrend closes below it and the beginning of a journey down to this trend line and to fill these gaps. And so I think on that journey, we could be returning to these lows of October 27th, 2023. And with that, I think there could be some opportunities to short the market and make some money on it. And so what I've been doing really starting in December, so that was, around price over here. So price has gone up. I've started to build a very small position, really just every week. I add one more share at, $12, $13 a share. It's pretty cheap. I've just been adding to this S&P 500 short ETF, ticker symbol SH, which is not leveraged. It's just inverse the S&P 500. And if it were to return to the highs of October 27th from the current price, or, from right around here when I began to build my position, that would represent approximately, if I take a measurement, that would represent an approximate 20% gain. So I think that's pretty nice, and that's without leverage. But there are other ways that profits can be made using leverage. And so this is the first one I started adding to because it's not leveraged. But then I wasn't able to find a ticker for leveraged S&P 500. I did just recently though, and that is ticker symbol SPXU, which is 3x leveraged inverse S&P 500. And I actually already have it drawn up here, forgot to delete it. But if we do take a measurement from the bottom here to the top, that represents an 80% move. So I think that's, much nicer than just the 20% one that you see with the SH. And then prior to knowing about SPXU, which I just started adding to, I was aware of the SQQQ, and this is 3x inverse the NASDAQ. And so from that, I've been adding to it, smaller position than what I have with SH, but still, it's growing. But if we take a measurement from today's close up to the highs here, that represents an over 100% gain. So I think that's pretty nice, even better than what you see with the SPXU. But one thing that's really stood out to me, and this is something I'll go over the explanation for why in just a second, but the SOXS, this is 3x leveraged short semiconductors. And if we take a measurement from the lows of today, or the close of today, to the high of October 27th, that represents, I guess that's, the high of the end of October, October 31st. But that represents a more than 230% move. And so why is that so much larger than shorting the NASDAQ or shorting the S&P 500? And so that, it has become clear to me that the reason for that is really based on this tweet. This came out on January 19th. And so I'm just going to click on this to zoom in on it. And so Otavio says over here that the S&P 500 just closed at record levels, yet only 1 out of the 11 sectors made new highs today, and that's technology. And so the disconnect becomes more evident when considering the 5-year performance across different sectors. And he refers to this as the tech bubble 2.0. And so my thoughts with this are that if the S&P 500 is to turn around, if it is to top, I think you can make a lot of money shorting it. But I think a way to short tech, which gives you a little bit of an edge, because this is going to be correcting much more than the rest of the sectors that go into the S&P 500. But one could short semiconductors, and I think that would give you an edge. And I think that's why you see here a more than 230% gain if prices were to go back to the October lows of the S&P 500 or the highs here, a 230% gain versus shorting the NASDAQ, which would be 100% gain, versus shorting and that's leveraged, versus shorting the 3x leveraged S&P 500, that's an 80% gain, and the shorting no leverage S&P 500, only a 20% gain. So shorting the semiconductors with 3x leverage, while it might be 3 times more risky, it seems like there's a lot of gains there. And so, like I said, I've just been adding on a weekly basis 1 share or maybe a little bit more at $4 a share. It's pretty easy to do. But over time, as we start to realize over the course of the months of 2024, I do think that there will be a reckoning and that this will be turning around, coming back to this trend line, potentially to fill these gaps. And I do think that there's going to be a lot of upside on shorting the market. And so that's what I plan on doing. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.